All right, good morning. This is the week of July 18th, 20 2022. Okay, so let's just go over what we see. This is not for day traders. This is for someone who wants to get a view of what the market looks like for this week. So I'm only kind of giving a view of what the market looks like this week. This is not if you want to day trade on lower time frames, like the 15-minute, the 5-minute, or even lower. This is for people who want to buy and hold for shorter or longer periods of time. Okay, so just kind of like doing a review of what the market looks like this week. I'm going to start on the highest time frame over here on the left-hand side. And what we could see, because we're trading QQQ this month, is for the quarter, if I just change, this is looking at it a Heikin-Ashi. We're in the month of July. We're going to week 3, right? And there are 3 months in a quarter. July is the beginning of the quarter, and it's showing us that this is supposed to be a negative quarter if you're looking at the Heikin-Ashi. If I look at it like a regular candle, let's just look at it like a regular candle, we could see that right now it's at the bottom of the quarter from before. This is this quarter. Price is going up right now in this quarter for the first 2 weeks, but we're still at the bottom of the quarter from before. So I kind of just want to like point that out and just kind of show where we are. What does it look like from a Heikin-Ashi standpoint, and what does it look like from a real candle? Okay, so let's go down a time frame. We're going to go from the quarter to the month time frame. And as you can see, it looks very similar. Price is up this month for the first 2 weeks. Last month was June, and you can see the MACD is negative. You can see that the candle was red. And right now for this quarter, I'm sorry, for this month, the candle is green. It's up. But if I turn it to a Heikin-Ashi, you can see it's a strong, right now it's a strong red candle saying price is supposed to go down this month. Okay. Now, one of the things, can Heikin-Ashis change? They can. What I try to do is see if price is going to go above like 50% of the price from the previous month, which would tell me that the Heikin-Ashi could change. If you start to see the price go above the 50% level of the previous month, it could change the way the Heikin-Ashi looks. But for right now, it's still in a position of a flat top red Heikin-Ashi because price hasn't really gone above the 50% level from the previous month. So you can see the MACD is still a strong red for this month, and it's saying that this month is still supposed to be a negative month. Okay, so let's go a little bit lower. Let's go into the week. Okay, if we go into the week, we can see that for the last few weeks, the QQQ has been trading sideways. It hasn't really jumped down or jumped up in price. We really have just seen sideways trading for the last 1, 2, 3, 4 weeks. A lot of like up and down movement, which could be hard because if you're trying to hold, it could be hard for you to make money in either direction because it's not really moving in either direction. Whenever you see sideways trading, I always feel like it's a great opportunity for them to take people's money, because if you don't buy enough time when you see this or when this is happening, you can get stuck in trades, and then you buy in one direction, it goes in the other direction, and then if you don't buy enough time, you've lost your money before you have time for the trade to really work itself out. So just kind of coming down on a lower time frame, we do see sideways movement, which means it might have been really hard to trade over the last 1, 2, 3, 4 weeks. Now, we also see that the MACD, the signal line has not changed. So we're still in the red. It looks like it's getting close though. If you see it, it looks like it wants to get close. It's gotten close before and then kind of come right back in a negative direction, right back in the red. So price has not, the MACD has not changed, and it hasn't crossed the signal line just of yet. So Now, if I take a look at what does a Heikin-Ashi look like, you can see last week's Heikin-Ashi was a green, and they're all these like little dojis, right? All these little dojis. The last one was green. So let's come down on a day. Excuse me, guys. So let's see what price looks like from on a day. Now you can really see the sideways movement. You can see price rejected this level and came down. It rejected it again and came down. And now we have price about to go right back up to the same level it rejected here and here. Okay, so some things that I would look for this week. I mean, it's about almost an hour before the market opens. If I just kind of come in a little bit, we can see we're coming right back to this level again, right? If I just zoom in a little bit, price came in overnight. So what are some things that you should be looking for as the week goes on? Well, the MACD is in the green. So the first thing we're going to look for is we're going to look to see if price will break through this rejection level. Is price going to break through? So that means we need to see if price is going to break above it looks like around 297.93. 297.93 is where we need to see is price going to break through. Now, here's some things that I was looking at. I see this looks like a pattern to me. So I just wanted to share this pattern with you. And if this pattern, you always have to wait for patterns. So once you start to see something forming, in order for you to know if it's the pattern or not, you have to wait to see, does it keep moving in the direction of the pattern? So I'm going to share this with you really quick. Let's see. I want to share this with you. Oops. Okay, so hopefully you can see this. You are sharing. Okay, I think I'm sharing my screen. Hopefully you can see these patterns that are in your course. So I wanted to just share this with you. And right now what I see forming is something called a bearish triangle. I'm sorry, a bearish rectangle, right? So this is what it looks like to me. Now, like as I'm looking at it, and let's just go over to this. I really honestly can't tell if this is if you can see, I'm trying to figure out if this is a bullish rectangle or a bearish rectangle, right? Because we can obviously see it looks like that's what's setting up. Now, if I just look at it from, let's just try to take off. Oops. Take off. Just take off the extended market. Let's put our Heikin-Ashi's back on. Okay, so we could definitely see that the line is coming from, if you take off the extended market, you can see the line is coming from below. All right, so let's go back to the pattern. And let's see. So that would make it a bullish rectangle. Okay. All right, so what we need to wait for is just to see if that's what this pattern is. Now, you don't know until the pattern is complete. How will we know when the pattern is complete? You see, it has to reject the level about 1, 2, 3 times. So this is the first, this is the second. So we would be looking for a reject level right here, right around this price, if that's what this pattern is. If you see it rejected, it comes back down, it looks like to about right here, then you can expect it to bounce, looks like bounce back up. Now that's if this pattern is. So what you would be waiting for is just waiting to see what happens. We know that if price goes above this level, this 296.94 level, that's not what this pattern is. So then you say, okay, well, if let's get more than one option. Okay, let's look at if that's what this pattern is. If this is what this pattern is and you start to see it forming on this high level, what you would need is price to reject this level again. So you would need it to reject this level again. It would come down to about right here, and you would not enter until it breaks through this level. See, it tells you to enter when it breaks through the level. Okay, so that's when you would enter. You would not enter now. You would need to make sure that that is what this pattern is. And that's how, so if you see it rejected, come back down to here and break through. That's when you would enter through when it breaks through. Okay, let's just say, for instance, it does not reject this level and it keeps continuing. If it keeps continuing and going in an upward direction. Let's go back to here. Now, one of the things that I noticed, and this is just how trading is, you just have to be patient. You have to be able to just wait for a clear signal of what is happening. If you could see what was happening right here, okay, let's look. Let's just pull our Fibonacci out really quick. We had a really low pullback or reject pullback. So if you put the Fibonacci on this first pullback, if you see, it was a 78%, it was a 78% pullback before it went back to this level, 78%. Then what happened? Let's take it off. I'm going to remove the Fibonacci. It did it again. So let's look at the Fibonacci here. So we had an upward Fibonacci, another upward Fibonacci. So these are the first upward Fibonacci's we've had in a really long time. Since, I don't even know, like maybe the beginning of the year, everything has been negative. So meaning downward Fibonacci's. So these are the first ones. Here was the first one right here, comes back up to here. Here's the second one. It comes back and does another 78% pullback, all to just now it's on the way back up to this level, the 297 level. Okay, so this is an upward Fibonacci. So another way, if we do not see the pattern continue, which is that that bullish rectangle, then another thing that you can look at is if price goes above this 297, what you could do is we just received an upward Fibonacci. What you could do is put a backwards Fibonacci on it. So you would hit A, B, and it would tell you the next level that price is going to, which is about 310. Now, if price goes up to 310, let's just look at it on a higher time frame. So price goes up to about 310. Let's look at 310 right here. This would not, we wouldn't even hit the 20 moving average line. So every now and again, as you can see, price has to pull back on different levels. It has to pull back on the smaller levels. It has to pull back on the higher levels as well. It does not mean we're out of a downward trend. It just means we're in a higher pullback. Let me just move this down. You can see right here on the weekly, price pulled back. Looks like right around March 21st, week of March 21st, 28th, and April 4th. So there was a high level pullback, but we were still in a downward trend. So until it crosses above the 20, we're still in a downward trend. It's just pulling back on a higher level. Okay. So what does that mean? As price was going sideways for the last few weeks, we have to see if price is continuing this week, meaning is it going to continue in this pattern and still give us some sideways movement? That means if it rejects the 297 level, we can expect price to come back down to finish this pattern off. If it does not reject this level and we see price continue in an upward direction, it just means that we're in a pullback on a higher level. So we can expect price to at least go between 297 to about 310. Okay. So if you are looking to If you're looking for a longer trade, these are the things that you should be looking for as the week starts off. We should look for either this pattern to continue, to reject this level, come back down before we maybe get a stronger pullback, or we should be looking for price to break through this level and go up to the 310 level. Okay. Now, one of the things that I've taught you when it comes to, let's just go over some of the things that I've taught when it comes to like simple trading, like buying, just waiting and getting the red Hakanashi. So waiting for the pullbacks and getting in on the red Hakanashis for the downward movement. You can see right now, obviously, these are green Hakanashis and prices going up. And remember, when there are stronger pullbacks, there can be an even stronger downward movement until the market decides that it wants to stop the trend, the downward trend. So right now, if you look on the 4-hour time frame, we are in green Hakanashis. So you would not be doing any trades until you see some, if you're using the pullback strategy, meaning you're waiting for price to go up, which is going up right now. And then if it rejects this level, you would be getting in on the red Hakanashis for the pullback, for the trend that we're currently in. Okay. So hopefully this made sense. Let me just recap it and go over what you should look for this week. There's 2 things that you should be looking for this week. You should be looking, I'm just going to take our Hakanashis off. I'm going to go back to the 2 time frames, the day and the week, and the 4 hours, sorry. The day and the 4 hour. I'm going to take our Fibonacci's off just so you can see it clear and do a recap. Okay, we have sideways movement. We have a pattern that looks like the bullish rectangle is forming. And so if price rejects this 296, looks like, let's see. Oops. The high was 296.58. So if price rejects this 296.58, let me see, this high was 296.75. If price rejects this level, this 296.75 level, then we can expect price to move back down in the pattern and come back down to these levels if it rejects these levels. So if you see a red Hakanashi, that's when you would get in and bring it back down to like around the 280-ish, 80, 279, 280 level, right? If you see price rejecting this level, all I want to tell you is that these are going to be right now, while price is trading sideways, these are shorter movements. The pullbacks are shorter. So if price rejects this level, that means that you're going to be in the trade for shorter periods of time. So you can't hold it for a long period of time. It's a shorter movement if it rejects this level. If price breaks through this level, then we can expect it to go around the 310 level. Come back up to about the 310 level. Okay. So those are some things that you should look for this week. You're either looking for this pattern to continue, or you're looking for the Fibonacci upward trend that we see on the day chart. We're looking for it to continue, or we're looking for the pattern on the 4-hour to continue in a downward movement. And you just have to be patient and just wait. And you'll know when you see price break through or price continue and reject this level. Okay. Another thing is to be very cautious, is that whenever you see price break through, you want to just make sure. So you want to give it, maybe if it's going to 310 and it needs to break through 396, you just want to make sure that price is continuing. Because you could see right here, it went just a slight tad bit above this level. So sometimes price can break through just a little bit, all just to turn around. So you want to get a nice breakthrough and hold on a smaller level. So if you want to look on like the 15-minute chart, you want to see price stop and continue in the same direction. Okay. All right. Hopefully this was helpful.